Hey everyone, welcome back to the channel. So in this video, we're going to be covering HEX Elliot Wave Analysis. Remember, if you like this kind of quantitative and technical hybrid analysis on the HEX price, leave a thumbs up, be subscribed by the end of the video if you weren't already, and let's go ahead and do some Elliot Wave analysis on the HEX price. So there was a previous video, it was actually a live stream I did with Look Into Crypto, where we did a bit of Elliot Wave analysis, and this was on not only HEX, but Bitcoin and Ethereum as well. We kind of prefaced the whole video with that kind of macro perspective. And I did want to point out that not only your Elliot Wave analysis, but most of your analyses, most models for that matter, will depend on the analyst, obviously, and the way they choose to parse the data, as well as the time frame they're looking at, right? There's plenty of discretion in the way you choose to build your models, and so I did want to point out this unique Elliot Wave analysis that I don't think I've really ever seen anyone do on YouTube, Twitter, or I just haven't seen it, right? So let's go ahead and quit rambling and jump right into it. So what exactly is Elliot Wave analysis? It's pretty simple. This is the most fundamental framework of Elliot Wave analysis, and you can get deeper into subwaves, right? I think each of these individual waves is broken down into subwaves. So again, you can go really deep into it, but just zooming out, what is Elliot Wave analysis at its core? It's pretty much this, right? You have a 5-wave movement to the upside, where your first wave is to the upside. So your odd waves are to the upside, right? Your 1, 3, and your 5, whereas your even waves, your 2 and your 4, are to the downside. And there are certain rules, such as your 3 wave is generally not the shortest, right? Not always the longest, but it's not the shortest wave. And it makes sense, right? Given this illustration here, it reflects that fact. And with your ABC corrections, I believe this right here, which is showing, is a zigzag ABC, where the C wave goes beneath the A wave right here. But there are also flat ABC corrections where, for example, it would have been A, B, and the C could have ended up around here somewhere. And that would also be a valid Elliot Wave ABC correction. So again, you can go deep into this. Feel free to go. This is just an Investopedia graphic, so feel free to go to Investopedia. It's the most generic, common, chart analysis definition site. I digress. This is your Elliot Wave analysis. And so do you see this pattern playing out on the HEX price? And again, it's to the discretion of the analyst and the time frame, but if you look at it, I'll go ahead and unhide these drawings real quick so you can see what I've cooked up for you. Boom. There it is. So I could go ahead and erase this and just kind of start all over from scratch for you, but let's just go ahead and actually show you what I'm talking about. So this is actually really messy. Should I start over? No, let's just leave it like this. So I started off the chart with what looks like an immediate ABC correction. I'm not sure if you don't even have to draw this part specifically. You can obviously start at the very bottom here at the global bottom, which was 0.00005 of a dollar. Absolutely insane. About 1,000x ago, a little under 1,000x ago. That's 100,000% gains, mind you. But yeah, so you see this first impulse wave playing out, which is the up wave, right? So you have your 1 and your 2. Your 3 wave is the longest here in this case. It's not your shortest. And if you actually zoom out to the daily, you'll see why I decided this to be your kind of your 4 wave, because this actually, it might not seem like much here, but this was actually a 40% correction. So a little more shallow than what we're currently seeing, but this was a 40% correction before a final 5 wave, which again, this 5 wave is generally characterized as this last gas oomph to the upside before an ABC correction or before a downtrend. And oftentimes you see divergence playing out from the 3 top to the 5 top. And I believe, yeah, you can actually see it playing out here on the RSI, some divergence. And then I went ahead and plotted this ABC correction, right? So a zigzag where C went slightly lower than the A wave. And then you had your second impulse wave to the upside. So your 1 wave, your 2 wave, again, your 3 wave is not your shortest. So you could argue it's not longest. Maybe this one is longer. I actually didn't measure. But yeah, it's not your shortest because this first impulse wave was the shortest. And then And if you plot this on share price, right, because there was obviously your stock split analogy here going on, you could actually plot this a little more or something like that. However, since that's not reflected in the USD price, I decided to just opt out of it and kind of to represent that a little better, take the bottom of this to the candle and the top of this to the wick. It gets the message across without being too messy, right? So you had your final last gas, and notice again how your last gas, for example, over here was just about a little over 2x above this peak over here, whereas this peak was like what, 6x above this one. So it just to further illustrate that your 5 wave is generally not going to take you to an all-time high that's way past the top of your 3 wave, right? Over here, for example, it was just barely above it. And I guess that's kind of analogous to the ABC correction, how you can kind of have like almost a flat top, flat 5 wave. It's almost like a double top, if that makes sense. But then again, we had our ABC correction, and this was the first time we actually, talked about Elliot waves, and this was on Twitter. You can go back super far on my Twitter, back over here in February when I was saying, what, could this be an ABC correction? And not only that, it was finding support on these previous resistance zones. So this was kind of a pretty obvious trade you could have made. So again, this is the previous resistance zone I was talking about, the 0.0067, and we were finding the zigzag ABC support on it. So it was looking pretty good. So we've had plenty of 1, 2, 3, 4, 5. We've had plenty of 5 impulse waves and plenty of ABC correction waves. And so where could we be now, assuming this here was the beginning of a new 5 wave pattern? Well, this is what I have so far. It's taken a while in this video to get to this point, but this is where we currently are now, where I potentially see the HEX price going. Okay, and we had our initial 1 wave, which was a nice, what was this, a 3 or 4x, and then we had our downturn with our 2 wave, just a nice little correction back down to exponential and horizontal support. Our 3 wave, which has not been the shortest, right, because this was like a 5x, a little over if you count to the wick. And then we had our correction here, which has been approximately, I think, a 50% dip. Let's go ahead and take a measured move. Look at what it's been. It's been a 52% dip over the course of 10 days. And we've only given back about 2 weeks of gains, which compared to the Bitcoin and Ethereum charts, Ethereum has given up 55 days of gains. Bitcoin has given up like 110 days of gains. So on the HEX price, we're only back to prices of 2 weeks ago. So keep that in mind. It's easy to normalize when we're just going straight up, but then remember, like, wait, we were only crossing the 3-4 cent penny zone for the first time like a couple weeks ago. This is still in May. Remember this. Back on track. We are in what I am calling a 4 wave, right? I don't know what's going to happen. Obviously, nothing on this channel is ever financial advice. Your generic disclaimer for this video. But this is what I see, given what we've seen in the past. We've had our nice long 3 wave, and could we be in for not a bounce, but an actual final, 5 wave here, where we push up to the 10 penny region, which a lot of people have been calling for. We see the liquidity distribution on Uniswap V3 go all the way up to like 10 plus pennies before it starts getting before you start getting thick order books, right? Not only that, certain models like the regression rainbow on lookinghex.com shows you that your midline, right, the green level, is currently at around the 13, 14 cent level if we hit it in June. So again, none of these models are deterministic. We have no idea what's going to happen, but do I think we could still have room to move up for a final last gas push up into the 10 cent region, which if we did, again, this lines up. This lines up with Elliot Wave Analysis, where our 5 wave would not be our longest, because again, our longest wave was this one, which was a 5x, and going to 10 cents from here would only be a 3x from the local bottom we've had it around the 3.3 penny region. So a lot of things are lining up. This is your Elliot Wave Analysis. on the HEX price. Obviously, there are plenty of ways you can draw this. Excuse the noise. I'll have to end this video soon here. But yeah, there are plenty of ways you can analyze this chart with Elliot Waves. This is just one way. So I'd love to hear if you have any other ways of drawing the same sort of analysis, because if you zoom out on a weekly, there are different ways you can draw this, right? So, I mean, I'll get rid of this. Just remember that our target, so to speak. Oh, actually, here's a good point. Not only is our Elliott wave analysis target to the above 7 cents, right, nearing the 10-cent region, but that also converges with our bull flag that we were looking at. That converges at around 10 or 11 pennies. Pretty interesting. Pretty interesting. But what I was getting at was, let's go ahead and erase this and show you that you could also do this analysis on a weekly chart, right? And it would be just a much more macro sort of thing. So you could say, okay, what if this is our first Elliott wave, and then this is our, I guess over here, this actually went lower. I don't know why it doesn't show it on CoinTrader Pro. Let's say that. Then you could say we're in the middle of a 3-wave that could be a long one, right? Depending on what your target is, it would coincide something a little more like that, right? And this, I mean, this is valid. This really is valid. If you consider this to be kind of like an anomaly, a blip, the big payday event, supply shock, then you could draw something like this and say, well, what if we're still in the middle of our 3-wave? Is that a possibility? Yes. Like I was saying, there are plenty of ways you can actually choose to do this, and I just wanted to present to you that my way is obviously not the only way, and to each their own discretion, to each analyst their own models, right? And just what I was getting at earlier, how I kind of had this realization, was that this 10-cent region actually coincides with our bull flag. We've been looking at this bull flag for a minute, saying, you know what, we could still bounce around in this channel. Who knows when we break? Who knows if we actually break to the upside? But for the most part, we've held true to this channel. We've held true to this channel with obvious wicks breaking beneath it and obvious wicks up here breaking above it. However, this still to me looks like a bull flag. And you know what? I was going to make a whole other video on this, but let's go ahead and just jam pack this one with value and look at some quick Fibonacci retracements. Might still make a full video on this, because if we look at this move over here, this 1 wave, this 1-2, this is what I'm looking at right now on this other chart I'm about to pull up. 1, 2. If you go from the 1 to the 2, then you see that where did price fall back down to? It's actually cleaner on, yeah, let's look at it on this chart, sure. So where did price fall down to when you look at this impulse move up, this 1-2? Well, it fell back down to this 38.2% Fibonacci retracement level. For those of you who aren't aware with Fibonacci retracements, they're based on the golden ratio. Again, go on Investopedia, Google it, Fibonacci retracements. We had our Fibonacci retracement back down to the 0.382 level, and then we had our move up, right? Our 3-wave, allegedly. And now we're coming back down. And so this 4-wave, well, you just look back and say, well, this Fibonacci retracement went back to the 0.382 level. So what would that look like right now? Well, the 0.382 level is at 3.4 pennies. And I believe we referenced this in a previous video saying, what would it look like if we fell back down to the 38.2% Fibonacci retracement? This is an hourly chart to more clearly show you that we came right down to it. And look at that. Hourly wicks barely pierced it, and the candles were damn near on it. So this is getting a little more bullish with every model that I'm looking at. This could actually be the very bottom. It could be the last time we test the bottom of this channel. For example, we've seen price go to the bottom of the channel, to the top of the channel, top, bottom, top, bottom. Could it be that we actually, next time we go above it, we break it, hold it as support, and then start moving higher? Potentially. Could this be the bottom? It could be. It really could be. I remember saying that exact statement around here somewhere, saying, could it be the bottom? It really could be. Because it's hard, again, it's hard to speak deterministically and say you know what's going to happen because you really don't. But when certain models start converging, this bull flag, 38.2% retracement, bottom of the channel, things are looking good. That's all I can say, okay? So that's that. Could we break out of this bull flag soon? Potentially. I can't say for sure, but I will keep you updated on these markets most definitely. I also have an entire video lined up, right? I have a new model actually on the quantitative side, so that's pretty cool. I haven't added a new model to that Google sheet in a minute. I'll give you a hint. It's on the share price, right? How that decouples from HEX price, and we haven't talked about shares really at all on this channel, which kind of blows my mind because they're such an integral part of the fundamentals of HEX. And so that'll be fun. It opens up a whole new Pandora's box of content to cover for that. So that's your video. I do appreciate you watching. Make sure to leave a thumbs up if you like this kind of hybrid technical and quantitative analysis on the HEX price. We'll be talking about pulse chain a lot. You guys showed a lot of love on that video too, so we'll definitely be making more content on that series. I appreciate you watching. Be subscribed by now, most definitely. If you aren't already, turn on the bell. We drop videos every single day, and I'll catch you in the next one. Peace.